go on to get the discussion started, we'd like to hear what your thoughts would be on the conversation this morning. If you send a WhatsApp message to 0809 444 0981, WhatsApp messages also. And then you can also go over to youtube.com/smooth 981 FM Lagos. That's it. Let's get into the figures. Let's start punching them down as we understand the figures according to Nairametrics. Nigeria's inflation rate rises to 31.70% in February 2024. And we haven't seen this headline year on year this high since the days of the Good General Abacha back in the days in 1996, 31.7%. How much and how high can we go beyond this?
Okay, so thank you very much. Well, concerning the figures, it's quite alarming, and it's also something that is, quite let's say, pathetic for me personally, because when you look at it, when you look at the fact that our interest rate, the monetary policy rate is at 22.75%, and inflation is printing at 31.7%, you realize that we have a long way to go, and it's going to like erode people's earnings. No matter, even if you don't, let's say for people that even invest actively, they're still going to like see a significant erosion. So it's a major problem that we really, really need to look at, and it's not really like okay for the economy as it is right now.
All right, thank you, Samson, for that. Now, food inflation, say 7.92%. Already, state of emergency has been declared for food insecurity. Do you think things are getting worse?
Well, yes, they are. They are. And I'd like to break down that food inflation. When you look at food inflation, we have several factors affecting it. From the domestic markets, we have a disparity in the transfer of food from one part of the country to another, which is a major issue that we really, really need to look at. And it has been lingering for a very long time. Imagine that we are in a country and some states are having food inflation as high as 46.32%. I'm talking about Kogi now. Rivers is around 44.34%. The inflation is as quite high as that. I also have some states even that are printing at like 40.83%. Now, when you look at the states, and you now come down to some parts of the country, and you still realize the fact that some states are having inflation at 31.46%, 32.56%. That's for the likes of Bauchi and Plateau. Now, when you look at these figures, you just realize and be like, are we not in the same country? And the reason for this is not far-fetched. It's just based on the fact that the logistics of transporting food from one state to another, and the fact that some states have more land and they have more, let's say, labor-intensive market that is less geared towards farming compared to others. So all these things are the major issues that we have. However, we have serious issues about transporting food from one place to another. Another factor we need to look at is food importation. When you look at the supermarkets, look at a lot of our shops, you've realized the fact that a lot of food items have been imported into this country. Now, in February, something happened. Exchange rate disparity, this FX volatility, we can see that the naira devalued significantly, especially in the official market, like that's 4.86%. We moved from around like 994 to 1005 in the official market, something similar in the parallel market. So all these factors really, really affected the price of food items, and it skyrocketed food inflation. That's why we are seeing food inflation going as high as that. So we have local issues we're dealing with. We have external issues dealing with. Insecurity too is also part of it. And all these things combined are the major factors why we saw inflation go as high as that.
So this takes me to a state like Kogi and a state such as Plateau that you talked about. Should they have any business having this food inflation issue, knowing that the land mass, the weather is just so fine? Why are we experiencing such figures from their own end? Kogi, for example.
Okay, so you see, when you look at those states like that, the major thing you have to look at is number one, is it a landlocked area? Number two, what is their in terms of farming? How vast is the farmlands? Like how exposed or advanced are they concerning farm? What are the kind of food products that they have this kind of competitive or comparative advantage over other states. So when you look at it, these are the factors affecting those states. So any state that doesn't really have like some like major farming activities is going to be affected by food inflation, because you have to like take it from another state, import it from another state, or rather, let's say maybe import a lot of food from another country. So all these factors are one of the things that are affecting them, and we really, really need to look at that. The government really needs to find a way to ensure that that food, let's say the transportation of food, the distribution of food across states is being looked at. It's not just about doing subsidies. Subsidies is just like curing a very deep wound, just scratching the surface. You can't really solve the issue deep down. So those are like the major factors that we have.
So just crunch down these figures and let's get it home to the man listening and the man on the street now. What these figures mean for the average Nigerian?
Okay, so what this figure means for the average Nigerian is that if you invest 100,000 or you save 100,000 in your account, let's even start from that. So if you save 100,000 in your account, that means that on a year basis, as of last year, rather, by now, that 100,000 would have been depleted by, let's say, 31,700. That's just what it means. So you'll be left with around like less than 63,000. That was
Wow.
it. Now, in a situation where you now decide to say that, oh, let me try my best, let me beat inflation, let me invest, and you now do something like you now invest in a particular treasury bill, and let's say the treasury bill that you bought is doing very well, fantastic, and it's at like, let's say 19%. Now, if you do something like that, by the time you look at it and you've gotten your 19%, let's say you've gotten your 19% returns on it already, still, by the time you deduct that inflation on parts of it, because the calculation, the summary of real returns is just like nominal rate minus interest rate. By the time you remove inflation out of it, that means that you're still getting a negative of like 12.7%. That means that your 100,000 that you've invested, even with the 19% interest that you're getting on the treasury bill, you're still going to be left with a deficit of 12.7%. That means that your 100,000 will be at around like, let's say, less than 92,000 naira. So that is what it means. And this is a serious issue. So this is where it now comes to the fact that you now have to do extra work just to be able to beat inflation, which is something that can be very tedious, especially for the normal, for the layman that is just trying to like invest in something that maybe is quite not technical or not too let's say deep.
We're speaking with Samson Owolabi, Associate Research and Portfolio Management, Zedcrest Wealth. We're talking about Nigeria's inflation hitting a 28-year high. If you've got a question or a comment, you can send it through to us via WhatsApp 0809 444 0981. And you can also tweet at Smooth981. We're streaming live, so you can catch the live stream on our YouTube channel, Smooth981, and you can also post a comment on there. Samson, what about investment securities? Will investors demand more based on where the real rate of return is?
Well, for me, I believe.
Sorry, please just define rate of return before we go into that.
Okay, so real rate of return, right?
Mm-hmm.
So I've already said something about it before, so let me just repeat again. Real rate of return just means that your, like, let's say your return on an investment when you have factored in inflation. That's just what it means in simple terms. So it just means that your return after you've deducted the impact of inflation. So as I've stated before, you invest 100,000 in an instrument, your return is like, let's say for our assumption now, your return is like 19%, but inflation is 32%. By the time you do that factor, you reduce it, you still be left with a deficit. So that's just what it means.
Okay.
So that means you're going to have a negative rate of return. But assuming you invested in something of like 20% and inflation is at 15%, then that means that you're going to have a positive rate of return of like, let's say 5%.
All right. Thank you for that. And next MPC meeting is coming up. What are we expecting?
Well, for me, I believe you're still going to expect some hikes. should expect like 100 to 200 basis points hike, because I believe the MPC is also going to do something about it. But one thing that you need to look at is that we saw exchange rate volatility at its peak in February. I know a lot of policies came in from the CBN, which also make them the naira to devalue. Now we've seen a moderation this month. We've been seeing moderation this month. Naira has not been devaluing at some aggressive rates that we saw last month. So there's going to be a cool down a bit. And also the MPC they're also looking at these figures, and they're also going to look at the fact that they want to see the impact of the 400 basis points hike that they did. So when they look at the impact and they realize that, oh, maybe they are seeing positive move, or let's say they are seeing positive results, then they can decide to say maybe they want to hold. But for now, with the place where inflation is currently, we should still expect more hikes.
Well, again, it looks like someone suffering high fever, and we decide to just keep pouring cold water on that person. But this takes us to the next question of this rate hikes after rate hikes, but inflation still keeps rising. What do the fiscal authorities need to do? Is there any trick we can find in the books any longer beyond break and the rates hike?
Okay, so for this, we need to understand something, which is one of the mistakes that the CBN is, or let's say not really a mistake though, it's just like a shortfall or something that they need to improve on, and that's the fact that even though you hike interest rates, if the kind of inflation you have is a cost push inflation, which is what we are having currently, it's going to have limited impacts on inflation. And what's cost push inflation is the kind of inflation that comes from high cost of production, which leads to the increase in the prices of food items. So there's high cost of importing food into the country. There's high cost of producing foods. So when you look at all these factors, you will realize that no matter how they hike it, it's still going to be affected. So all these things are things that they need to look at. They need to reduce liquidity in the financial system, which is something that I believe is part of the things that they're trying to do by hiking interest rates. Is a positive one actually. And so all those things, CBN, the fiscal authorities, they have to be like a convergence between monetary policies and fiscal policies. By the time there's a balanced approach towards these things, so between both rather, then we are going to see positive results.
All right, I've got a message coming through. This is from Fine Oluboroko, and he says the truth is subsidy removal and naira devaluation are the main reasons for our high inflation rates. However, our greed has also increased the inflation rates higher than what it's supposed to be. That's why you see the prices of items in the market keep increasing almost daily. That is pure greed. Okay, well, that is all the time that we have for Business Express this morning. Thanks for your message. Thanks for listening. And special thanks to our guest, Samson Owolabi, Associate Research and Portfolio Management, Zedcrest. Well, thank you, Samson.
Thank you for having me.